Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. In today's video, we're talking about Corsair Gaming and why I think it is due for a 172% gain in the next 12 months. Don't forget to smash that like button and subscribe. Remember, this video is for entertainment purposes only. I'm not a financial advisor. I'm not your financial advisor, so please do your own research. Corsair sells high-end PC peripherals, streaming devices, and gaming accessories. Those are three huge industries right now, especially after the lockdowns. They've grown massively and they continue to grow at an exponential rate. So think Elgato. Elgato is a Corsair brand. It is a high quality Corsair brand. So in a sense, Corsair is kind of like Logitech, but better and prettier devices. And they gear more towards the higher end consumer, and it's also more gaming oriented and streaming oriented. Before I dig into it, just look at how beautiful that PC is. I love the LED lighting. Here is just a subset of what Corsair sells. Corsair sells lighting, the Stream Deck, capture cards, even green screens. Corsair sells keyboards, mice, RAM, webcams. They sell a lot of peripherals. And just look at that, an LED lit mouse pad. How often do you see that? Yep, an LED lit mouse pad. And all of these are very high quality. But let's just pick one product, the Elgato Stream Deck. Basically an essential device for streamers. And it has a 5-star rating on Amazon. 1,100 reviews. It's just a fantastic device. Just head on over to Amazon, look at Elgato's ratings. Almost all are 4.5 or 5 stars. People love Corsair. So, what has the stock done for us lately? It's down 50% from its all-time high. So, is it a good buy or is it a trap? Let's see. Wow, that forward PE and price per sales is so small. Forward PE of 15.5, price per sales of 1.25. This is priced like a value stock, but it is growing like a growth stock. I'll show you in a second. Corsair has a very high short interest. Let's see if the shorts know something we don't. Let's see what the analysts think. Now, Corsair is a 24-year-old company and is still led by their founder, which is a very positive sign. But it is a newly public company, so the analysts don't quite know it well enough at this juncture. I know it pretty well though. I've been using Corsair products for over 10 years, as have many gamers. Analysts expect revenue to grow 20% this year. I think it's a little low, but it's not terrible. It's not a terrible number by any means. But look at those next year numbers. 5.4% growth. I will say this right now. Nope, I'm not buying it. Look at how far off analysts were in the last 3 quarters in their estimates. A 93% beat, a 15% beat, a 76% beat. Analysts just don't understand this company. Look at this revenue history. Revenue got pulled forward due to the lockdown, which means 2021 should be bad comps, right? Nope. Sorry, still growing. A strong 24% revenue growth in Q2 compared to the Q2 that revenue supposedly got pulled forward on. 24% year-over-year growth is very strong, especially for a company with a PE of only 15 and a price per sales of 1.25. So this is a growth stock with a value stock price. So this is why I think the analysts' 20% growth projection for 2021 is short. Now on to EBITDA. So what happened from Q2 2020 to Q2 2021? You saw the revenue, 24% growth, but a 4% EBITDA growth. So here's what happened there. According to Corsair, margins were negatively impacted by higher than expected logistics costs, including ocean and air freight, as well as pandemic-related shutdowns impacting operations. Despite this, overall gross margin percent remained flat with Q2 2021 at 27.6%. The company continues to invest in R&D and marketing for future growth and new product introductions averaged over 3 per week during the quarter. 3 new products released per week. That is crazy. Cash flow from operations of $31.6 million was used to pay off $25 million in debt. That's a very positive sign, very bullish. So, I mean, this is basically affecting every company right now, but here's the thing. This is all, those negative factors, those headwinds, they're all temporary. Once the supply chains get normal again, and once logistics costs get back to normal again, things will skyrocket. I expect them to skyrocket going into next year. So let's go into my valuation for Corsair. I'm estimating an EBITDA this year of $255 million, which is about the mid-range of what Corsair expects, with the EBITDA expanding to 2026 of $634 million. Tax rate 21%, which is kind of the standard corporate tax rate right now. You can see capital expenditures just grow gradually over time. Free cash flow as thus increases from just under $200 million in 2021 to $486 million in 2026. Oh, and also keep in mind, this is a perpetual growth valuation, a DCF valuation. And don't forget, you can get access to this spreadsheet as well as other valuation models at my Patreon. I have valuation models at my Patreon for AMD, Tesla FSD, Tesla Robotaxi, Palantir, and others. So I'm using a discount rate of 10%, a perpetual growth rate of 4%. So that indicates a today's value in my estimate of $6.7 billion for a fair value for a Corsair stock at $71.54. That indicates an upside of 172%. So let me know in the comments below, what is your fair valuation for Corsair? Don't forget to smash that like button and subscribe. Thank you to the channel members. Thank you to the patrons. You guys are amazing. Thank you so much. You keep the channel going. Thank you for watching, and I'll see you in the next one.